lidar, which stands for light detection and ranging, is a sensor technology that uses invisible infrared lasers to create a detailed 3D image of the sensor's surroundings. Ouster's lidar unit and software are tailored for several industries verticals, including automotive application, industrial machinery, robotics, and smart infrastructure, in which sensors and data help to manage energy networks, public water supply systems, and even traffic signals in urban settings. Now, they recently announced their earnings. So before we analyze the charts, let's get into this article. It is coming from the Motley Fool. Why Ouster stock is skyrocketing today. So Ouster published its Q2 results after the market closed yesterday. This was actually August 11th. That would have been on Thursday, posting a loss of $3.19 per share on sales of 19.4 million for the period. While the revenue for the period was in line with the company's guidance, its loss was lower than anticipated. That's probably why, or one of the reasons why it skyrocketed. And the company increased its cost savings targets for the year. Ouster grew revenue roughly 88% year over year in the second quarter, and the company's booking momentum looked even more impressive. The lidar specialist booked 43 million in new business with new and existing customers in the period. Despite the substantial sales growth, Ouster's net loss in Q2 narrowed to 123 million, down from 177 million in the period a year ago. Now, what are they forecasting? For the next quarter, the third quarter, Ouster expects to achieve 20 to 22 million in revenue at the midpoint of its guidance range. That would call for an 87% year-over-year growth compared to 11 million in sales it posted in Q3 last year. So the company is growing. Now, in February, Ouster closed its merger with Villadyne lidar and laid out plans for significant cost savings following the integration of the two companies. Management now expects to end the fourth quarter with 110 million in annualized cost savings, up from the previous target for annual savings for 75 million. So in some cases it makes sense to merge with a different company. In some cases it doesn't. Depends on culture. In this case, the merger was worth the risk as you had two little guys in the space. And when you merge, well, you get closer to economies of scales because then you can lower your expenses. Now, the 800 gorilla in the room is Luminaire, and they recently reported earnings as well. And I did a video about them. Just check out the channel. Now, going to the charts for Ouster. When I go to the daily chart, my eyes immediately gravitate to this huge resistance level at $20. But I can't even think about $20 because the price is sitting at $6.61 right now. And it's still sitting below this 13 simple monthly moving average. When I go to the weekly chart, however, what I can see is that volume is picking up, and that volume is bullish based on these green extended range candles. However, at the moment, you do have some resistance at the $7 level on the weekly chart. You had it as support, and then you had these two candles that could not get closes above it. It peaked its head over it but could not close above it. And then you had two more weekly candles in which sold off. Now price finds itself just below the lower portion of the band, and price also sits at just above or below rather the 26-day moving average. However, one indication that a bottom has been reached is although you are making higher lows, you really haven't made a higher high as of yet. Nevertheless, this 13 simple weekly moving average has bottomed and is pointing up. And at some point, potentially, if this bullish price action continues, you'll have a crossover on the weekly chart. So what I'm going to do, you have a drop in price, base in candles, and then a rally out. I'm going to denote this entire based on volume. I'm going to say this is the bottom, and that you do have weekly buyers down at the $3.50 level. And we'll probably see the pattern a bit better on the daily chart, at least the volume coming in. All right, so it looks like the volume came in on earnings. All right, so within this weekly zone, you have a daily zone, you have a rally in price, a base in candle, and a gap higher. Price came back, could not, well, depending on how you draw the zone, came back to pick up any remaining unfilled buy orders and then shot higher on earnings. So if I put a zone there, you can see that level a bit better. A rally in price, one basic candle, rally out, or leg in, basic candle, leg out, price came back, and then shot off from there. Now, when I look at current price, you can kind of see this range-bound price action. Again, the top side of the range is going to be this $7 level, which is serving as resistance. Bottom of the range is going to be the $5 level. And once again, on earnings, price shot higher, gapped higher. So the test is going to be this week. It's going to be interesting to see how price opens. Does it open lower or does it open higher? Potentially, if it opens higher and moves up, probabilities is it's going to move down, and you're going to have a down week on Ouster. Now, if price opens lower, puts in a, we'll call it a buyer's wick, and moves higher, maybe it has a shot of eventually closing above this $7 band. Nevertheless, Ouster is another player in the lidar industry. It's fairly new, based on revenues. It's one to keep on your radar if you believe in the technology. If you believe in a higher reward to risk ratio. Other than that, you might want to look at Luminaire as the leader in the space. Thanks for watching. Subscribe, please like the video.